YouTube, and let's get started on this straight away. Okay, and we are live. Let me go back to the Zoom. Okay, good morning, everyone, and welcome to another episode of the Crypto Hour. Now, there are some developments in crypto that you might have noticed by a quick change in the prices of most cryptos, and obviously starting with Bitcoin in particular. So we'll examine that, but also we'll have a look at the usual context, so the macroeconomic picture and the things that we've seen this week. And so we have to, this week, the focus in the markets has been on the housing market in the US in particular. So some releases of the data and information. So we will look at that, and then we'll dive into crypto as usual. Okay, let me start sharing my screen. Sorry. Okay. Oops. No, don't want to cancel the meeting. Okay, can you all see my screen?
Yeah.
Fantastic. Okay, so first of all, now going on to this is as usual, the economic calendar for the week. So there isn't, as you can see, there weren't many red news events during the weekend. We don't really have much to wait for today, apart from the purchasing manager index released in the US. But really, although it wasn't marked as that particularly important, there were like 3 releases that were connecting to home sales. One is the pending home sales on Monday in the US, so we can see they came up as a lot above expectation. So it was expected to go up about 1%. This is months on months, okay? So from the month before, and instead it came up at like an 8%, so much better than expected. And then on Tuesday at 2 p.m. we have these two reports, which I can enlarge so you can read what they are. So this is the change in the purchase price for homes with mortgages backed by the 2 federally owned Fannie Mae and Freddie Mac, with banks that support the mortgages in the US. So that was again, the decline was a little bit better than expected, although there was a decline of minus 0.1%, but the market was expecting a bit more. And also the S&P composite index, which again, it's the change in the selling price of single-family homes in 20 big cities across the US. Okay, so that was a little bit lower than expected. So it had been growing at 6.8% a year. This is the price of new homes. It came up as 4.6%. So although we had a lot of increase in home sales month on month, the creaks are starting to show in the housing market. And as we can see, the kind of like the price growth is starting to slow down. It is expected to then start going negative in any time soon. And we see that, obviously, as we see these reports and I'm talking to you about it, then we can see the things in numbers, in charts. So how we look at the housing market, the most relevant chart for home loans is the 10-year Treasury bond in the US. So as you can see, this is a very long-term chart. So it starts in 1980, okay? And it goes all the way to today. So as you can see, I mean, it's not difficult to see how this has been going down for almost 40 years now. Sorry. So from 1980 to really to 2020. So this is the lowest point we had in interest rates, which are almost down to zero, it's like 0.3%. And then, as you can see now, the trend has been broken, as we've broken, the previous swing point, which was just about here. And this was broken just towards the end of last year. So, now the interest rates, on the 10-year bond. So this is the yield that you get by investing in 10-year treasury bonds in the US has been going up. And so this is then determines the price of the mortgages when you want to, buy a house. The mortgages are based on this. So, as you can see, it's been an upward trend, and there is some discussion on, especially in the past, since the beginning of the year, every time somebody who's anybody in the monetary committee has given an interview, everybody has talked about the necessity to keep increasing interest rates. Okay, so the expectations of the market are for interest rates to keep going up. Where it will stop is, your guess is as good as mine, but the market was expected to peak at about 4.9%. That was towards the end of last year. Now, the expectation are between 5.5 and 6%. Okay, so quite a big difference in the expectation in this past, change in the market expectation in these past 3 months. Okay, so having said that, so this is why I wanted to spend a couple of minutes talking about this today, because this is the real economy. So this has an effect on real people's life, and obviously, if there is an increase in cost in the mortgage market, what will that mean then for house prices? Obviously, we're talking about here the US, but this will then mirror in many other places in the world, unless there are specific, the conditions of the housing market, they are specific to certain countries. But generally speaking, this will put pressure on house prices. Okay, so there is an inverse correlation between the price of the 10-year government, treasury note, the US treasury note, and the price of housing, because obviously the higher the yield, the higher the mortgage that people will have to pay. And so obviously if they pay more money out every month, they can afford to spend less in buying a new house. Okay, so, and as people spend more money on outgoings, because this, obviously based on the mortgages, but then also loans are becoming more expensive, credit card borrowing is more expensive, and so on. They have less money to spend on other things, and so then it's the reason why I showed you last week and other times the dollar index. Come on, play ball. The reason why I showed you the dollar index, and this is a long chart, but let's go into a daily, got a bit more significance. Because I'll split this in half, and I will show you on the other side the two different things. First of all, the S&P 500, and you can see the inverse correlation, like the dollar index goes down and the S&P 500 goes up. Funny enough, it's not just relevant for the US market, but even if you look at, this is the German stock exchange, for example, we can see how the same sorry, this is different time frame to today day. Okay, on a there is a high correlation. You can see the shape of the two sorry, what am I looking at? Sorry, I think I've matched the two things. I don't want the same thing, sorry. making a bit of a mess this morning, excuse me. So you can see the same thing is very accurate correlation, inverse correlation, like one goes up, one goes up and one goes down, which has an effect not just on US correlated assets, but also on other assets across the world. So there is a high correlation between the value of the dollar and how the markets do across the world. So whether it's the S&P 500, whether it's the German stock exchange, whereas the Nikkei, the Japan stock exchange, and this affects the whole all other asset classes. Okay, because so basically, the more expensive money is, the more businesses can make in being in business. So as simple as that. So please be aware of this when you when you invest, because there are good times and bad times for everything. But if you can imagine, what would have been the best time for investing by looking at this chart is when the dollar is more expensive, because that means that the price of stocks are kind of undervalued, and you get more for your buck as well, because you can buy when the dollar is so highly priced. It means that you get more for your money. Okay, and then eventually, as we know, this is dollar index. It means the strength of the dollar against the basket of currency. So if it becomes too expensive, then the US is not competitive. So this is not something that can keep going on forever, but it is something that oscillates and goes up and down with time as the economic conditions change. So this is the kind of like the general situation. And where are we? Let me move on to some crypto related assets. Now, what we have seen in crypto, you might have been aware of this. Let me go back to the single chart. Let's have a look at Bitcoin prices. Going to a smaller time frame. Okay, so this is quite noticeable, the drop on Bitcoin. This is this morning. Okay, it started this candle, whether this really long candle. It's 1 o'clock in the morning for me in the UK, so it would have been about 8 p.m. in the US. And now there are two reasons for this dropping quite drastically. You can see, prices in February had gone up. This is the beginning of February. I've gone up from like 21 to about 25,000, and then kind of like I settled at about this range between 23 and 24, and then we had this big drop. Now, why do these things happen? Is because normally are news related. Okay, and there is the one big news which is related to Silvergate Bank. Okay, so Silvergate is considered a crypto friendly bank, and it was kind of a release that they might so they warned in a regulatory filing that it might be less than well capitalized, and it was reevaluating its business. Now, this is something that a lot of crypto companies had connections to, like Coinbase, Circle, Paxos, Gemini, where all companies that were dealing with Silvergate, and now they distance themselves from the bank, actually, because they don't want to be obviously included in this. It's another centralized players' problems. I mean, this is not directly connected to crypto, as it's not that Silvergate is a crypto exchange, but a lot of their customers are. Okay, so what is happening? So, and together with this, there's another important news. Let me show you. So this is a kind of like an interesting article to read. And it talks about, apart from what happened with Silvergate, which is separate from this, but this is talking about custodial bank. Okay, now you might be familiar with with what the US is trying to do. Like the SEC is almost like trying to create crypto regulation by suing people. Okay, now there are being what they are trying to do. They are trying to stop banks dealing with crypto customers, not customers like me and you, but just talking about companies, so talking about, the Coinbases of this world and the crypto exchanges, etc., etc. So, because they're saying that, if, for example, even stablecoins are deposited in a US bank, for example. So the idea is that stablecoin should be one-to-one collateralized. So you have one, for example, Tether and $1 in a bank. But if banks are, and this is what the business model of pretty much all banks out there is, fractional banking, that means that even if something is deposited in the US, in a US bank, it doesn't mean that the money is there. It just means that then they can use this money to lend out to other people. So again, there might be a risk of uncertainty that's connected to the bank that is custodying those funds, rather than because of problems with the stablecoin. Now, because of this, Wyoming, I think last year, passed legislation to have a different type of banking, which is what basically crypto customers would need, which is 100% reserve banking. So this is a bank that needs all the time to have at least 100% of customers' deposits in liquid assets available to withdraw anytime. Okay, and this is like one of these banks is Custodia Bank, which basically only makes money through transaction fees. Okay, so they don't lend out. They're not allowed to lend out money to third parties, although they can buy some securities. Okay, so you will say that this is the most secure type of banking possible. Now they have been denied the possibility of linking to the federal bank, to the Federal Reserve, via master account, which is what all banks do basically, because this is the Federal Reserve is the one that at the end of the day settles all like US dollar payments. And the reason why they've been denied this access is not because of any problem with the service or with the structure, but because of the customers they're connected to. So now the Fed, the SEC is going directly against anybody who provides services to crypto firms. Okay, so basically they're trying to hit them at the knees. Okay, so not allowing them to access to the banking system. Okay, and this is it's very troubling in a way, because there is no law in place to say that this is this should be the case, and there is it's not as if they've proven that crypto is used for bad means. Obviously there are good and bad actors in crypto, like in any aspects of life and in investing, but they almost like trying to they're using the narrative that crypto is used being decentralized, can be used for terrorism and fraud, etc., etc. And so it's not a good idea to provide services to banks that operate in that ecosystem. Okay, and although it's troubling, at the same time there is the judicial system is acting a little bit towards is aiming a little bit towards the side of the crypto players, because I'm thinking, well, you are a regulatory organization, the SEC. You cannot make your own law. You have to apply existing law. So if you are going against something, you have to justify. And you know that we talked before about, I think it was last week, we were talking about Voyager. And you know, the Voyager has been acquired by Binance. Now the SEC has objected to this acquisition, and the judge that is overseeing the bankruptcy proceedings, which is part of, you know, where so Binance basically acquired the assets of Voyager, and the judge is basically you know, it was going to approve it because it's the best deal on the table. And the SEC has objected to this deal, but without giving a detailed reasoning for this decision. So the judge actually is going back and saying, well, basically put up or shut up. You can't just say, you know, we object to this and we're giving very vague reasons for it, but they have, you know, they have to provide a proper reason why they don't think this deal should go ahead. Okay, so it's at the moment is a very difficult situation for crypto in general in the US. Okay, and this is pushing a lot of players, a lot of you know, crypto firms away from the US and more towards countries that are more friendly to crypto. And funny enough, you know, although, you know, you wouldn't think so, but China is a lot more friendly to crypto than the US is. So you know, what the future may hold for many crypto companies in the US is not clear at the moment. And what everybody at the moment is really crying for is some proper regulation. So don't just come and just like legislate by suing people without telling them what the right procedure is to run a crypto business, but give them some proper guidance on, you know, on rules that cannot come from the SEC. They have to come from Congress, you know, from the legislative arm. So legislation and regulation is not only needed at the moment, but it's necessary for you know, for a healthy crypto industry to work and work well in the US. You know, from a positive point of view, now obviously crypto being a new way of doing things, you know, they're always, you know, the mindset in crypto is, well, we can't do this, let's find another way of doing it. So in a way, with all the problems that there are with centralized banking, there are now more and more solutions that are looking to do completely without the banking system and to do and so to provide interfaces so that you can go and directly use your cryptocurrencies in shops, restaurants, and wherever you want to pay, you know, to pay for goods and services. Now we'll see. So we'll keep finding news about this, because this is probably the most important thing right now. And what is kept also prices of you know, of crypto in general under a certain level, because there is a lot of uncertainty, and markets in general don't like uncertainty. Okay, me going to other news now. Quite important, as a new standard token that's been released in token standard that's been released in Ethereum called the ERC4337. You know, some of you may be familiar with ERC20, which is, you know, which most of the tokens on Ethereum are. So if you have, you know, tokens in, I don't know, Aave or Uniswap or something like that, those will be ERC20 tokens. And you might be familiar as well with different standards there for NFTs. And this new standard will allow account abstraction, and will allow a different way of dealing with smart contract wallets, and it will mean also the users will not have to write down and remember seed phrases. Now, I reserve my judgment on this and see exactly how it works, but basically that will mean that Ethereum wallets will be able to be to operate as programmable smart contracts. So this will enable users then to recover lost private keys, among other benefits. So, for example, instead of having let's say a seed phrase, you could use like two-factor authentication to secure your wallet, or biometrics through your phone. Now, and this is where I want to be very careful. That it could be a really good thing, but it depends. Everything, the devil is in the details, because there is a certain protection to wallets because of the seed phrases, I'm not, for example, 100% happy, if all the power to get into your account and your cryptographic keys, for example, were on your smartphones, because that would make you very vulnerable to basically being mugged in the street. Because especially now that most phones have face recognition, and we've been in London, we have many cases where people have been mugged in the street, then they had their phone pointed at them, so then that would allow people to access apps on their phones, and then because a lot of people have got their banking, they got, like, I don't know, crypto accounts, crypto exchange accounts, and things like that. They've had basically money emptied from their accounts in minutes, just by being mugged on the street. So it really, as I said, we'll see how these get developed, and and the security features that they have connected to them. But I for one, I've always been uncomfortable having both banking and also crypto exchanges on my phone, exactly for that reason. So I kept away from it. But we'll see. Obviously, the fact that people are looking at security, a different way of doing things, is a positive, and we'll see what happens. Ethereum hasn't got a good track record of keeping users' funds safe, as we know, with all the DeFi hacks that we've had last year. There have been billions of dollars that have been stolen from kind of like secure protocols. Okay, so we'll see. It could be good, it could be bad. We'll see what the future holds. On one of the company that failed last year, that went through bankruptcy, was Celsius. Now, Celsius had, and there are two types of customers on Celsius. Some of them had used Celsius as a custodian. Okay, so, and some of them actually use Celsius as to then stake their coins and get a return, etc., etc. So for people that use Celsius as a custodian, and this is an important definition in law. It's kind of, they've been recognized that those coins that were custodied by Celsius did not belong to Celsius, but belong to the customers. Okay, so now they have been able to start withdrawing those funds, because it's been decided that they actually did not belong to the customers and not to Celsius. Okay, that doesn't mean that the other users will have their money back, and I wish it was, but at least it's good that some of these funds are finding their ways back into the market. So it's good from that point of view. Let me see. Let's go on. So, the other reason why Bitcoin dropped by 5% in an hour is because of the Silvergate uncertainty, but also, can't remember if it was not. Sorry, it's another article. Let me just say. Okay. This is the other reason. The other reason why these things happen so quickly is because of liquidations. And you can understand this by looking at some of the places where people use more extensively to trade crypto, like Bitfinex and OKX, where most of the margin, if you see the difference between, this is a ratio between long and short. So people that bet on Bitcoin going higher rather than people that bet on Bitcoin going lower. And there has been a very high imbalance So most people were still betting on Bitcoin going long, even at levels, at 24,000 and above. And when going back to Bitcoin, so when there are pieces of news like this, if you look at this chart, okay, so a lot of traders would have put their stops kind of like around this level here, about 22,008. Obviously the ones that the more short-time traders would have added around 23,000, some more at 22,007 because it's the most recent close. Okay, so what happens here is that the first move is always like based on the news, and then they collect selling orders, because if somebody is going long, it means they bought Bitcoin. When they get liquidated, they are forced to sell Bitcoin at whatever the price is on the market. Okay, so this is why you see something like this, and you can even see on smaller time frames. Let's go into like a really small one, 5 minutes. You see how quickly this thing can happen. 5, 10, 15, 20, 25 minutes. So actually in 20 minutes, because this 5-minute candle here goes all the way down to 22,000. Okay, so this is in lots. Each candle is a 5-minute time span. Okay, and look at how quickly this can happen, and we're going from 23,004 to 22,000. So it's a massive drop in 20 minutes. Okay, and that's the reason why these things happen, because as you know, a lot of traders use margin so that they can buy and sell more than what they have in their account. But the downside of margin is that when there is a big movement and you're highly leveraged, obviously if you, let's say, buy 10 times Bitcoin than the money you have in your account, then you only need a 10% drop in price to wipe you out completely. If you have a 20 times leverage, then you only need a 5% drop to wipe you out, to wipe your account out completely. So you see what I mean? The higher the leverage, the more likely you are of being liquidated with a kind of like reasonable moving price. And this is, in Bitcoin terms, is not, it's not that large a move in general, just very fast and very quick. We're talking about 6% move at its really at its lowest, in an hour, and then it can actually it started to get stable. At the moment we are about 4.5%, a little bit less actually. Yeah, 4.4%. Okay, I've got another few bits of news that I wanted to share with you. Let me see. Oh, this is kind of like I say, where other people have problems, and we know that a lot of crypto exchanges have laid people off. This is including Coinbase. Binance is actually going against the trend, in the sense instead they're employing lots of people. So they have 500 roles to fill in the first half of the year, and they've already employed I think more than 600 people in 2023. Yeah, they hired 600 people since January, and they hiring another 500. So you can see what the winners and the losers are in this in this first few months of 2023. And again, I mean, Binance is coming out not so much as because they are the biggest, but because the business model seems to be the safest of the large exchanges. And at the end of the day, central exchanges will always be there, because there are people that prefer to have kind of like a bank-like service rather than do their own thing with their own wallet. But with all these problems that we've had, the ones that are left are actually pretty good. So Binance, Coinbase, Kraken, these are coming like the strongest bets in in crypto, the ones that have been more conservative as exchanges, and they're still going strong. On other news, FTX, now they're starting to unravel. at the moment it is showing kind of a massive shortfall in customer funds. So basically, in their exchange wallets and fiat accounts, there's been, kind of billions of shortfall. So again, at least this is the first step. The first step in seeing if anything at all can be recovered, and then start then refunding some of the assets that customers have lost access to. But it's quite a grim view. And as you know, FTX, the FTX funds doesn't just affect individual customers, but many crypto companies had funds with FTX. So it's more kind of just confirmation of all the bad news that everybody was expecting. Other, as you can see, the fight against crypto continues in a way. Now, UK banks, again, HSBC and Nationwide, had to ban crypto purchases with credit cards. Okay, so again, crypto is not going anywhere, but it is finding who their friends, who their enemies are. Unfortunately, as I've told you before, I mean, we have accounts, personal accounts and business accounts with several banks in the UK, and I really, how do you say? I'm not happy with the idea that a bank can tell me what I can or cannot do. I understand that there is a space for them giving warning to the users, and maybe before you're trying to do a crypto related transaction, and you might have to answer some questions or something like this. But the fact that they can tell you can or you cannot do this with funds that are yours, it really goes against my grain. So that's the situation. That's the situation we found ourselves in, and we're waiting to see what the light at the end of the tunnel looks like. I personally think that we're going to go find an onboarding solution that is completely outside of the banking system, but we'll see. Let's see. Okay. In other news, we'll see. Okay, Bitcoin. Other news: the Riot blockchain, which is one of the biggest Bitcoin miners, together with Marathon Holding, had reported that it tripled the hash rate of its Bitcoin miners, and also they've increased the number of Bitcoin they produce. It was up 46% from the year before. So it's as you can see, although the price of Bitcoins have gone down a lot in 2022, you can see the investment carries on in the background. So the companies that are investing in Bitcoin mining, Bitcoin mining infrastructure, are still adding to their capacity, rather than closing down. I mean, there have been some miners, Bitcoin miners, that have actually, because of the price, the drop in price of Bitcoin, have gone down immensely, and they've gone through bankruptcy. But the biggest players are still there, and they're still going strong. Okay, now I just wanted to, I know that we often talk about levels, price levels, like what you see here in the chart of Bitcoin, or what you see in any chart. Like, give you an example here. For example, this is Australian dollar against Japanese yen. Now, when you look at these charts, this is a 4 hour on the left and 15 minutes on the right. You just see a lot of noise. Okay, you see a lot of things going up, things going down. There is no clear indication of what's going to happen next. But what I wanted to tell you, discuss with you for a few minutes, is that investing and trading is all about, if you are looking at technical investing and not at fundamental, where you look at the company's balance sheets, etc., is all about pattern recognition. Okay, so I just wanted to have a little test for you, and if you have seen this before, then please don't reply. I just wanted to look at the FedEx logo, and so if you particularly know the story behind the FedEx logo, then keep quiet for a minute. But for those of you that have never ever thought about this before, can you tell me what the main message, what the main image that you get from looking at the FedEx logo? So I will see if anybody can please post it in the chat. Because in crypto, like in this case, is all about spotting patterns and things that you can see and things that you cannot see, and about teaching yourself to recognize patterns. So, so anybody can tell me what the main image hidden in the logo is? Come on, guys, let's sharpen your eyesight. Sharpen your eyesight. I'll make it a little bit bigger. Oh, sorry. There we go. Bigger. Oh, I can't make it any bigger. Okay, anybody with a message? Exit. What does it mean, exit? Mugi. There is a specific image. I know, Jeff and Archie. I know that I told you guys on Monday, but for everybody else, and this is kind of like the things that what I'm talking about is, okay, can you see the arrow now? Now that I'm pointing it, can you see the arrow in the chart between the E and the X? There is an arrow. There is an arrow that points, because that's the logo. That's the FedEx logo. Basically, is an arrow. Okay, saying that we're always moving forward, we're always delivering, we're always busy delivering your things. Okay, and so that's the main message in the chart. Is not the name, is not the colors so much, but it's the arrow. And if you look at it on in other logos, is maybe a little bit more obvious. I can say when you see on, I think there was an image of a. Can you see here, for example? Can you see it's a bit more obvious here? Maybe, but there is a, where is that, on the side of a plane? Oh, I can find it right now. But sometimes in some ways it's more obvious, sometimes it's not. But that's the main image that they want to portray, is the arrow. Okay. Now the same thing. The same things is, when we look at charts, or we look at technical analysis, like in these cases. Okay, so you might think, oh, what's going on here? It's, I know that many of you that look at this thing are in Australia right now, so it's a Friday evening, and I think you might be not thinking what's happening to the Australian dollar, but sometimes today is a good day for the Australian dollar. So if you start seeing this, sorry, where are we going? So what is this? Oh, this is still a 1 month. Let me go on to a 4 hour. Okay. So we got 4 hour on the left, and we got 15 minutes on the right. Okay. So as you can see, there's a lot of going up and down here. There's no clear direction. But if you actually start training your eyesight, it then gives you a better idea. Like for example, you can see on a bigger time frame, on the 4 hour, this is a kind of like a demand zone marked in yellow, and we go to an even bigger time frame, is a supplied zone right at the top. So what you tend to do as trading, you just tend to trade between the demand and supply, and you're waiting. So the reason why this is important, not because you have to become a trader and make money trading, but because you're thinking, if you wanted to buy the Australian dollar, okay, because you think it's going up, is it better to buy here, like where the price is at the moment, or wait until we get to a level of where we know there is some demand waiting, and wait for price to drop to what you want to pay? Or if you want to sell Australian dollar and buy yen, is it better to do it here or wait to get to a level where we know there is kind of like a wholesale price, because you know that there is selling pressure at this level? Okay, so this is the thing that I wanted for you to understand, whether you want to do kind of like a little bit of trading on the side, or you want to invest in things for the long term. It's important to understand when things are expensive or when things are cheap, and to train yourself to basically buy and sell at your price rather than buy and sell at somebody else's price. So, okay, so in the middle, so to understand, to put it into perspective, okay, we might consider the top part like wholesale prices to buy the yen, and the bottom part as wholesale prices to buy the Australian dollar. Now, for somebody that wants to make an income by trading, then you use these as saying, well, I buy here and I sell here, or I sell here and buy here, and this is the kind of thing that we do as traders. But on a more fundamental level, you can use these things by moving to longer time frames with daily or weekly, to understand what the trends are and at which level. And this is the same whether you can do it for a currency, you can do it for stocks, you can do it for futures, for anything. You understand exactly which levels are where the demand is and where the supply is, so that you can get things at wholesale. We all like paying less for the things that we buy. So sometimes the only thing you need to do, instead of going to, I don't know, Costco or another big wholesaler where you can buy your groceries at a discount, is the same for investments. So you go and buy stocks, you go and buy bonds, or you go and buy anything. If you are a little bit patient and understand when they are cheap and when they're expensive, you can get a lot more for your investment. And the same thing here. So bringing back to Bitcoin, for example, let's go back to a bigger time frame, for example, for an hour. Oh, sorry, do I have it here? So can you see here how accurate this can be? Now you are thinking, that's where a lot of people are panicking. The price is going down, the price is going down, the price is going down. But if you learn to read this, okay, first of all, this area here on a larger time frame, we are on a daily here. I mean, this is then I've drilled down to the 1 hour chart, but this is marked on a daily chart. This is a supplied zone. Okay, so if we look at, maybe I'll go up to a 4 hour. So we'll see how, you see when price started coming up in January, we had a cluster here. Okay, then if you see when the price went up to 23, 24 and then came down, where did it stop? It stopped right at the edge of this cluster. Can you see? It stopped where it met, because this is an area of demand. Okay, so there are people that are waiting here to actually buy Bitcoin again when it drops down to this price. And obviously this was very accurate. And from here, then it bounced all the way up to 25, and then it dropped down again. Now, when you revisit this area, we have again buyers there waiting to buy Bitcoin at a good price. Now, it doesn't mean that the price cannot drop off completely, but generally speaking, it will take a little while for all this demand to be absorbed, unless there is another, big bit of news, like as I say, like FTX going down or something like this. But generally speaking, if there is normal market conditions, you will see a lot of activities within this range. So all this demand needs to be absorbed before price goes down again. And this is why I showed you this. This is the line from the previous one, so we can take that off the chart. But we can see, so this is the demand, and this is the point where actually you would put your orders in. So this will be your entry, and this will be your stop, okay, for this zone. And look at this, look at how price respected that level, because it's exactly where price has stopped before, and where, if you can see here the origin of this move, okay, you can see here at this level where price went sharply up. So why do you think there's a bounce here? It's simply because people are thinking, well, if I had bought Bitcoin here, I would have made a lot of money. So when price goes back there, I'm thinking, well, maybe I can try again. I can still make a lot of money. Okay, so and funny enough, I mean, here you need to be a little bit precise as well, because everybody, you might think, oh, I'll buy at this point here. But really, this point here is a reaction to what demand that was created before, because it's where we break this the previous high, and it's on this candle, and so this candle comes all the way from here. So this is the point. This is the point where really the maximum imbalance is, and then the market just retraces, does an immediate retest of the previous high, and then it, boom, it goes up all of a sudden. And you can see here as well, look how quickly price then from here retraces. I mean, this is already, a $500 difference in since this morning, in the face of a big drop. So this is, I'll say, it's not an exact science, but I think if you train your eyes to spot the patterns, then you can use it to your advantage. Okay, so if any of you is interested in learning about trading and learning how to do these things, so I have no plans at the moment to run a trading course, but if there is enough demand, I might schedule one in the next few months. So if you're interested in it, please contact me directly, and I can put you on a waiting list, because I said it's not, I've got nothing planned for now, but I'm not immune to a little full-time immersion into trading. So this is my email address. So if you're interested, contact me directly. Okay, I think we finished for today. So let me see if you have any questions you would like me to answer. Come on, anybody?
With the Ethereum, there's a new release, like the Shanghai release, and then after people can unstake. What do you think? Does then the Ethereum price go up or go down? Because many will unstake, and there will be availability of a lot of Ethereums.
Yes, that's I mean, it's a $1 million question, that one, because we don't know exactly what people's behavior will be, especially when that upgrade happens. Okay, but the people would actually stake Ethereum before. Obviously, some people staked it for a long time, so talking about years here. So the actual Ethereum that will become available as a cost base, that generally speaking is a lot lower than the price at the moment. Okay, so people that might have staked Ethereum maybe bought it at $150 to $200, And even if we are far away from the highest point that Ethereum reached in 2021, it's still a lot of money for people that bought, a long time ago. So it's normal to think that some people will want to cash out. And if they do, obviously that will have a pressure on Ethereum's price to go down. But then there are more people that now are attracted to Ethereum staking because they don't have to actually lock their tokens away for a long time. So there has been an increase of Ethereum staking because of that as well. So we'll see. The answer is in the balance. Are there more people that want to stake the Ethereum or more people that want to sell it? And time will tell. I think that everybody expects, at least in the short term, for it to be a drop in Ethereum price when that happens. That's the expectation. Then we'll see. We'll see what happens.
Thank you.
Now, the question, if the SEC class all crypto other than Bitcoin as a security, should we be concerned? I mean, you should be if you are a US citizen, obviously. But generally speaking, what that means is that a lot of the crypto business would actually move away from the US, as it already has done. Binance US, it's had its hands tied for a long time now. Has it stopped Binance growing? It hasn't because although our US friends like to think that they are the center of the world and everything happens around them, it actually doesn't. And so the only thing that will happen is that the fulcrum, the center of gravity of the crypto world will move away from the US, and they will end up being long-term losers because as I say, the crypto technology business is going to be really, and I'm not talking about crypto tokens now, but generally the blockchain technology and business will going to be huge in the next decade, and they might lose out to other countries. Another question: do you think crypto will align with another currency? What do you mean, Paul? Don't understand the question.
Sorry. Yeah, we know that obviously the US dollar, the fiat, is obviously a big factor for crypto. Do you think it'll ever align with something else?
No, I don't think so. I think that obviously there will be, the stablecoin business will. So you will have, as crypto becomes bigger, then you will have euro stablecoins and yen stablecoins and so on. But in terms of what crypto will use for its survival long term, I think that we will be going through algorithmic stablecoins personally. Because it is good, the whole concept of crypto is to do away with intermediaries, and so stablecoin are intermediaries as well. So because again, there is some US dollars that need to be looked after by somebody, so they need to be in a US bank somewhere. So the sooner we can do without that, the better would be for the whole crypto industry.
Luca, you mentioned that crypto will move to China, but hasn't it been kind of suppressed by the government in China?
No, not so. The cryptocurrencies have, not the blockchain. So China has invested quite heavily in blockchain technology, but they are made mining Bitcoin illegal and so on. So are restricted in many other ways. So they want to control you, obviously, as they do everything as much as possible. But no, the blockchain technology is quite big in China. Yeah. So a question from, I think it's Cornelia: do this buy-sell zone correspond to resistance support? I don't talk about resistance, to be honest with you, Cornelia, in my trading style. It's just, for me, it's the wrong way of looking at a chart. I'm talking about demand and supply, because at least in my style, I mean, other people would teach you differently, but in my style, the reason we trade at certain points is simply because there are institutional orders that are have been unfilled. Okay, so we're trying to find out where the institutional orders are, so that we can join on the trend. Okay, so that's the main in a few words, that's my trading style and the way I like to do things. The resistance and support is how the supply and demand shows on the chart, but it's almost like it's not the cause, it's the effect. So I like to look at the cause of the reason why things move, not the effect. Okay, anybody else? Any other questions? Let's see. Most of you, I think, are usual users of this of the crypto hour. But Jonathan, I remind you all, if there is anybody new, there's a couple of names I don't recognize. If you are new to it, remember that Jonathan runs a Cardano-based session at 9:30 on Discord. So please just post the link in the chat box, so that if there's anybody new, you can just click on the link and attend that at 9:30. Highly recommend it, because Cardano, obviously, we didn't talk about Cardano today, funny enough. One of the rare cases. One of the rare cases, but I really, you all know it, but I really rate Cardano very highly, and I think he's going to be one of the survivors of these crypto mayhem that we've seen, because it's got an amazing community, and they do things in the right way, in a scientific way, and I think they're doing the groundwork that many crypto projects haven't done, of being ready, not for now, for the use that for how people are using crypto now, but the way that crypto will need to be used in 3, 4, 5 years time, when we have billions of people using this technology. Okay, and if projects don't do it, they haven't done it today, they will need to do what Cardano has done in the future, and will be a lot more painful for them. So sometimes, like, slow and steady wins the race. So we almost have like what's it called, the hare and the tortoise. Ethereum is the hare just jumping ahead, and Cardano is the slow and steady tortoise that's going towards the end and win it in the long run, I believe. We'll see. Anyway, okay, so I think we can close the call now. I wish you all a nice weekend, and enjoy. For those of you that come to my Monday class, I will need to cancel Monday evening class, because I am all week I'm attending a course, so I can't. I'm not free at that time, the usual time. But so we'll see you all in 2 weeks, not this Monday, but the following Monday. Okay, but I'll post on Discord so that you know everything. All right, have a great weekend, and I will see you back here on Friday. All right.
Thanks again.
Bye, everyone.